if I want to start reviewing my insurance every year, like what are some triggers to change things
It's a great
from
question.
your perspective?
It's a great question.
And what's your review process look like?
Yeah, I would highly recommend you review your insurance regularly. And regularly can be a relative term to how much change you have in your life. Is that a good level?
It is.
Cool.
Yeah. All right. All right. You ready to go?
I'm ready when you are.
All right. We are continuing our insurance endeavors.
Yeah,
We are trying to just really understand insurance because it's really important.
it is.
Most everybody has to have some kind of insurance, or most people do, even if it's just like cell phone insurance. Mm-hmm. But nobody truly grasps how deep insurance can get. And then sometimes we're forced to make some wild assumptions.
Yeah.
Right?
Yeah.
So, guys, we have a special guest who is all things insurance. She is a very intelligent woman in a lot of aspects, but also primarily why you're here is to discuss insurance. So, Christina McClary Insurance, and
Yes.
I'm going to kick it over to her to let her introduce herself a little bit and tell us a little bit about her background and how she got into insurance and all
Thanks,
that stuff.
Brandon. I appreciate it. Thanks for having me.
You're welcome.
I like to refer to myself sometimes as an insurance nerd because literally this is all I've ever done in my career is insurance. So I have over 20 years of insurance history, both working for the corporation that provides insurance and now as an insurance agent, being the person that sits down with customers and helps them review what they have and what they need. I just love insurance not because I grew up as a little kid and I want to sell insurance. Literally, maybe 2 people do that.
I don't know anybody that does.
Yeah, no. And as much as I love it, I probably wouldn't have done that growing up. But when I got older and saw what insurance actually does for people, the peace of mind it can provide, the way it protects what people spend their whole life saving for, something very near and dear to your heart, making sure that people have a good plan for how to make their money work and how to make good financial decisions so that they can have financial freedom. Insurance is kind of the backbone of that.
It is.
One of our former leaders in the insurance industry said that insurance is the lifeblood of capitalism. And I love that because you can't really have a market economy without protecting the things that could make that whole thing crash, right? You can't own stuff and protect and not protect it.
We talk a lot about like what could possibly derail a plan. So a lot of people meet with me and we talk about the future and we make a lot of projections based off of what we have and what we think we can accomplish, what our income's going to look like and what our spending is like, so we can plan savings and plan everything into the right bucket, and whether that's putting more money into real estate or more money into an account or more money into your current home or into future, planning for future expenses. A lot of that it still begs the question, well, what if the plan breaks down? What if I'm expecting to work all year next year, but I get sick? Or what if I expect my home to appreciate in value, but there's a tornado? And so you're spot on. Like it's exactly, it is the foundation of, it's a piece of that foundation of planning. We need to have things in place to make sure our plan that we work hard towards, or that we work hard in building, that we work hard in accomplishing, doesn't get totally derailed. When we're not talking a lot of times about like once in a lifetime events. Sometimes it's, hopefully you don't have a lot of car accidents, but a lot of car accidents happen every day.
And a lot more every day now. And that's the thing a lot of people don't think about is your insurance policy protects a lot of things. Let's just take car insurance. It's protecting your car, your liability to other people, right? So it protects other people, your property, and your stuff, and it protects you as well. So there's coverage for injuries to you. There's coverage for your vehicle. There's coverage for if other people don't have insurance.
Yeah.
a lot of people drive around without insurance. So
Drives me nuts.
I know. It's kind of my pet peeve. Not because I want their premium, but because I see what happens when people don't have insurance. It creates chaos because the process is so difficult. And so, yeah, nobody goes into life saying, man, I hope someday I have a car accident, or I hope a tornado hits my house. Nobody wants that. I don't want that for my customers. But what I want is that when they do have that happen, if the unfortunate thing really happens, they're good. They don't, that's the one thing they don't have to worry about, is the money aspect.
Yeah.
And what I see, and what we're just talking about, is it's not just the money involved in that moment, it's the money that they've accrued for their lifetime. So let's take an auto accident where unfortunately somebody gets hurt and it's your fault. You look down for a second and you smack into the back of somebody and they can't work for 6 months, or their injuries take them to the hospital. That's tens of thousands of dollars. If they can't work, they have a loss of work for multiple months or years. Guess who's going to be paying for that?
Yeah. And if you're only saving, $6,000 a year into, if you're Roth qualified into a Roth account, then you just lost everything that you've been putting away for the past year plus at least.
And people say like, well, I mean, whatever, I don't have anything. They can garnish future wages. Mm-hmm. There's ways. I mean, if you don't have the money available, that's not going to stop if you're sued. It's not going to prevent that money from being accessed if you're sued. Okay. Money that, well, you can't touch my retirement funds. It's not accessible till I'm a certain age. Want to make a bet?
Right. So we're going to back into like this. A lot of times when you mention people that don't have insurance, and there is a reality where some people just can't afford, or they're making insurance decisions simply based on their accessible or available cash flow. And for some people, that's nothing. Yeah. And so we sometimes are forced into decisions and then we don't really think about it. Things improve. Maybe we get a newer job, better job, a raise, different things change in our spending. Mm-hmm. So all of a sudden we have a little bit more free money. We're going to kind of back into talking about how to set up or how to review your insurance coverage, how often, things like that. But I think to start, it might be a little bit more fun. I don't know.
Insurance fun?
Yeah. To have a conversation about like common misconceptions about insurance. Yeah. So what are some of those common things where you meet people that are intelligent and, well-educated and they've done their homework, but they still are assuming things because it makes sense. Yeah. But it's not true.
Yeah. I love that. Smart people. Makes sense, but not true. I think that's very much what my role is to help people understand that. I don't expect that everybody knows everything about an insurance policy. Do you know why? Because it's a legally binding contract. It's tens and tens of pages long, right? Yeah. And there's pieces and parts of it that people don't take the time to read through that contract or understand what's covered and not. And so the cool thing about it is that I have 20 years of experience and have seen these things. So let's start with my favorite, which is full coverage.
Full coverage. So if I'm
so your auto policy, right?
Yeah, I'm fully covered.
That's where this comes up. I've got full coverage. Okay. It's a common misperception that means you have all the coverages, right?
Okay.
But what's important to me is that people understand that all coverages have limits. And so you can have a car that has all available coverages and it can be protected with all available coverages, but the state minimum requirement is woefully underinsuring you, right? And what I mean by that is any state, no matter where you live, requires liability insurance, which has nothing to do with you. It has to do with protecting you if you hurt somebody or damage somebody else's property. It's a third-party coverage. It only covers other people. So in the event that there is an accident and you have only what the state requires, and it's the minimum that they require, let's just say it's $25,000 in injury.
I was going to say in Tennessee, I think it's $25,000, right?
$25,000 in injury coverage and $15,000 in property damage coverage. So that's saying if you go out here on the street that we were sitting in front of, easily in front of your office, probably $400,000, $500,000 worth of cars, just in this, 4 or 5 spots, right? Right. And one of those cars, let's say just one of them is involved in this accident with you. what is the likelihood that that car costs less than $15,000?
Probably zero. 0%.
And if anybody shopped for a car right now, it's even less likely now than it was a year or two ago. So the limits on your coverage are super important. And so, yeah, you might have the coverage that's required to get a car or to drive your car legally. But if you were to get into an accident and it's your fault and you only have $25,000 in injury coverage and somebody has $100,000 worth of injuries, who is responsible for the difference between the $25,000 that you have in coverage and the $100,000 that you have in bills? It's not the insurance company.
I'm going to guess it's me.
Yes.
Right?
And people will think, well, I had full coverage. You did, up to a limit.
Right.
My very first week in the agency after I bought my business, so I bought an existing agency, current customers, somebody walks in with a letter from a lawyer, and it's a letter that was for an accident 364 days ago. And it says you're being sued for $150,000. And they looked at me and said, what does this mean?
And I got full coverage.
Right. I'm good. I've got full
right?
coverage.
And
Your company's going to cover this, right? And I said, you have a $25,000 limit on this policy. So no.
And I'm just guessing, but that the insurance are probably already sent the $25K, so the $150 is what's left over
what
potentially,
they're responsible for as a result of this lawsuit, if you know, after it plays out. So limits are a huge thing. And then in the example where you only have what the state requires, which is liability, let's say your car gets damaged and somebody in your car gets hurt. You have no coverage for that. None. And so people say the word full coverage. Now, let's say you have all of it and you've got the coverage for your car and you've got the coverage for the people in the car. There's a lot of other factors that come in now, right? What is your deductible? That's a big thing. But there are still limits to all these coverages, right? So that's an important thing for people to understand and to really know what those limits are and to sit down. Now, look, I say this to people all the time. I'm not telling you anything you don't know. You don't need me to buy insurance. You can do it on your phone, right?
Right.
But when you do that, it's not going to tell you it's not going to ask you the questions of like, okay, what's really important to you? Do you have enough money in savings to cover yourself or enough liquid money that you're accessible to, that if there was an accident and it was $100,000 worth of injuries, you'd be able to cover that without it impacting your life in a meaningful way?
Yeah.
There are people out there. You probably talk to them every day.
Well, I remember years ago, like clicking through a website, and the website, like I filled out a bunch of information, and then it presented like a pop-up, not a pop-up, but the next screen was kind of like, would you like option 1, 2, or 3? And option 1 was a monthly payment of like $320. Option 2 was a monthly payment of like $280, and option 3 was like a monthly payment of $91. And I was like, duh, $91, right? Like, no brainer. Who isn't going to
make that decision?
But to your point, it did not tell me why there was differences. It's just like, oh, well, I definitely want this, because in my thought, like I clicked full coverage.
Yeah.
And so I just assumed, well, this carrier must be really expensive. It was all the same carrier. I was just naive. I was like, $91. That's gold, right?
And you are a smart human being. So we'll go back to the way you asked this question.
I wasn't necessarily back then, though.
You are an intelligent human being.
I was probably trying to click through quick so I could get to a weekend with buddies or something. But
exactly. And you just made a decision based on, whatever. I don't know what the differences are. Yeah. Buy insurance however you want to, but I just think it's really important. What I take value in and what is important to me is sitting down with customers and talking to them about this. Some people, that's a 5-minute conversation. I had somebody come in the office the other day. It was a 2.5-hour conversation. And it wasn't because I talk a lot, which I do. You know me well enough to know that, but it was because they asked detailed questions. Yeah. And that's the level of service they wanted, was somebody that could go through some scenarios. Sure. So another common, is that good on auto insurance?
That is, yeah. Yeah, let's move on.
Another common misconception comes around homeowners insurance, right? Okay. So homeowners insurance is an enigma because your home is like one of your biggest expenses.
And one of the biggest in your life, yeah.
And a lot of people,
well, now it's a tank of gas, but normally.
No doubt. A lot of people, when you go to buy a home, let's say the average American's not buying cash for a home.
Okay.
There are people that do, probably
Sure.
a lot of people, but the average American is getting a mortgage, and
Sure.
the mortgage company requires insurance. So
Yep.
they get their insurance policy. And I've seen two common misperceptions about this. The first one, we'll start with the first one because it's kind of the easiest, is, hey, guess what, Christina? I'm super excited. I just paid off my mortgage. I'm ready to cancel my homeowner's insurance. And I say, cool. Congratulations. I am so glad you paid off your mortgage. And let's have a conversation about why you may or may not still think insurance is important. So sure, you've paid off your mortgage. Your mortgage company no longer requires it, but you have an asset that you now own, free and clear, right?
Somebody will carry
yours.
that. Yeah, somebody will carry that risk for you.
Absolutely.
Relatively, I mean, bang for your buck. Like, it's absolutely, you're spot on. I'm thinking of like, so something that we do, if you guys are familiar with our app, when we talk about cash flows, we separate the debt payments from the spend, because the goal is to reduce our debt payments, and those debt payments go away and will free up and become free cash that we can either choose to spend more of or save more of, different things, and different ways it goes. But typically when you're building a budget, you just look at how much you spend overall. And we do that, but we pull out the debt payments in kind of a different category.
Yeah.
When we're putting in our mortgage payment, one thing that we do, or that I have them do, is I have them break down that PITI payment, so the principal, interest, taxes, and insurance. And the taxes and insurance actually get pulled out of the debt payment piece and moved over into the typical spend.
Yeah.
Because when you pay off your mortgage, my assumption is the taxes and insurance are going to stick with me for the rest of my life.
Yeah.
I've seen this time and time again. People come in for retirement planning, and I'll say, you need this much money. Your cash flow says you need this much money a month. And they're like, no, I met with somebody else, and theirs was this amount. I'm like, well, why? Like, where's the difference? And I'll go through and I'll realize that they're like, that we're going to time our retirement with the year that we pay off our house. So our mortgage payment's going away. Yeah, but you still have that $1,500 homeowner's insurance, and you still have the taxes that you have to pay for owning that property. That's cash flow. That's not debt service. So to your point, like there's assumptions about the mortgage payment on the cash flow side about what goes away later in life. But thank you for saying that, because you should never just decide, hey, I don't need insurance for the biggest asset that I potentially own.
And if you do decide, right, like I'm kind of a no judgment person. I try not to judge other people's decisions. Just make an informed decision about it, right? I think you and I have talked before in our circles, our networking meetings about self-insurance. People can choose to not have somebody else absorb the risk. Yeah. The idea of insurance is just, there is a risk that my house will be damaged in a tornado, right? We've seen, unfortunately, quite a lot of that in the last few years in Middle Tennessee. There's a risk that my house can get burned down in a fire. I've seen it. I've been to somebody's house when that had just happened. And it's tough, really tough. And I'm willing to take that risk, right? Some people say that. Now, you can absorb the risk yourself, but that's a question of, where do you live? What do you do? Are you counting on that $400,000 or $500,000 as part of your estate, right? Because these are all parts of that educated decision.
Yeah, and
just make an educated decision about it.
When we assume risk, I also think it, like, part of my education process for somebody sitting across from me is to say, hey, when we know exactly what the loss is, or the potential loss is, then that's a safe time to potentially plan to assume the risk. The problem is even if I had $10 million disposable, ready to go, if I own a home, I could say my home's value is this. So my risk of loss is, if my home is valued at $1 million, my risk of loss is $1 million. No, that's not true, because you're paying, like, the price of the homes around, the replacement home that you need to buy is going to be more expensive in the future, and we don't know when the loss is. So in that sense, the potential loss is uncapped.
It is.
We don't know.
You're right.
And not just like in speaking with, I have an old car, I'll just get bare bones insurance. Well, you don't know how much the medical bill is going to be, the damage that you're going to cause. So when I want to self-insure, maybe that's like with my cell phone, right? Like I know my phone is worth this, but I also know the replacement is $1,500, and it's really like it's going to be $1,500. I can, so when we talk about self-insurance, I always like, my job is to protect people from the downside risk as much as possible. And that's just a really important consideration, is what do I know about this potential loss? Is there a bottom? If I buy a $10 stock, can it go to zero? Yes. Can it go below zero? Not if you're just purchasing a stock. Yeah. Right. But if I want to waive insurance on my home, it's not just the loss of the home, it's the purchase of the new home. And I don't know how much that will cost when that time happens.
And all the stuff in it.
Right.
Because you now have to replace all your clothes.
Yeah.
All your pots and pans. All your electronics,
Yeah.
And people, I think, forget about that piece of it. Or they say, I'm willing to take that risk. And I think that's why I would always advocate for education. And what you do is tons of education to help people understand that. Yeah, so do I.
Understanding builds trust. Education builds trust.
Well, it builds peace of mind, right? It helps people make good decisions. That's what financial freedom is all about.
It is.
It's to be able to put your head.
What else? Do you have another?
I do. So another really common misperception about homeowners insurance is it covers anything that happens to my house. Right?
You would think.
You would. And a lot of people do. And this is, again, why it's important to have somebody who understands the policy. So the thing about homeowners insurance claims is that there's a lot that goes into determining the cause of it, because the cause of a homeowner's claim is super important. Yeah. One of the most common things that happens to a home that is not covered under most homeowners policies is home maintenance. Having an old roof doesn't mean your insurance company is going to replace it if something happens to it.
Right.
So the source of the loss becomes super important. If there's water leaking to your house because your roof is 30 years old and you haven't replaced it and there's a giant hole in it, that means all of that damage may not be covered if there is a loss.
Right.
So it's really important that people understand that piece of it, right?
Yeah, and I think the term is sudden and accidental, right? So I have a client who was having a home built, lease was expiring, so she was like, "Hey, I'm gonna move in with my mother for a little while." Bless them, right? But they survived. But in the process, she was like, "I'm gonna put all my stuff in a storage." She got one of those pods, and had like talked to her insurance company and said, "Is my stuff covered?" Insurance company said yes. Put everything in the pod. The home build, like they usually do, kind of gets delayed a little bit. So what was only supposed to be about 60 days turned into about 6 months.
Wow.
Bless both of them, her and her mom, living together for 6 months. They survived. But when she went back to get her stuff to move it into her new home, everything was like covered with mold.
I hate that for them.
So she calls the insurance company and said, "Hey, there was a little hole in the pod. I have insurance. I need all my stuff replaced." And they said, "Sorry, because it was not sudden, or there was no cause, there was no definitive cause, no accident." So now, because of the coverage requirements from the company that she was using to store her stuff, they basically said, that we require you to have insurance to cover your stuff. Your insurance company isn't paying, so we're not at fault.
Oh, wow.
So now what should be, or what could have been a potentially like easy process to deal, like I say easy, it's easier to deal with insurance companies than it is to go through a legal court battle, hire attorney, all that stuff, the wait. So she's starting from scratch. I mean, that was everything she had that was in that. She is having to build one piece at a time, paycheck by paycheck. And, hopefully at some point the court will decide that there was some liability with the storage company, or, you know, maybe the insurance company was missing something and there was an accident. But that's a process, and she can't wait for that process to work out for a bed, for kitchen appliance, utensils, whatever. So that's, I mean,
yeah, it's important to know. So where that would come in play with your insurance would be knowing ahead of time, right? So when people call us to ask that question, there's two pieces to it. One, your policy only covers a certain amount for belongings covered off premises or outside the home. So let's talk about that. How much are you moving? If it's your whole house, you may want to consider getting an additional policy from wherever you're storing it. It might cost you, you know, $100, but you have that peace of mind. So
Right.
just, I'm not gonna make that decision for you, but I want to educate you and inform you so you can make the decision for yourself. Also, the definition of sudden and accidental, right? So if there had been a lightning strike that caused a hole in the pod,
Right.
that may be considered
that would be
something
very
to be
sudden.
covered because it's sudden. But in your house, a slow drip in a pipe. You bought a house that's 30 years old and there's a slow leak behind the wall. Guess what? 99% of the time, you don't know that until there's a flood in your house.
Right.
And, you know, if it's a slow maintenance leak over time, that might not be covered.
Yeah.
Let's speak of flood. Sudden and accidental would be a massive flood. And we've had, what, 3 or 4 of them in the last 10 years?
Yeah. It's been
100-year floods or 500-year floods, whatever they call it. We've had a lot.
Yeah, I seen like, you know, through COVID and through all the stuff that we've been going through, something that was like something to the effect, like, I'm really looking forward to precedented times. So to your point, like 3 or 4 100-year
Yeah.
floods in 10 years.
Yeah.
Really just want some precedented
I like
normal time. But yeah, so
Yeah.
floods.
So floods, almost all homeowners insurance policies are not going to cover floods, meaning any water that comes down from the sky on the ground into your house, groundwater into your house, mostly not covered by homeowners insurance. You can buy a flood policy from FEMA. There are brokers that sell it too, but FEMA sells a lot of them.
But most people,
federal government.
and
But
most
you can
people
get them
when-
from just any insurance company. You
Sure.
don't have to go to the government to
but
buy
you
them.
and you
but
have to
that's-
ask for it.
You-
And
oh, you
again,
do.
that's something too where
Yeah.
even still you need the education
Right.
about why.
Right.
Because I've sat down with insurance people who have told me, like, you don't need insurance cover or the flood insurance where you're at. You don't need earthquake coverage where you're at. You don't need particular things, and take advice for what advice is, but being like, okay, well, help me understand, like, what is going to happen if this, and this.
So there are zones that are considered likely to flood.
Right.
FEMA decides the zones that are considered flood zones. And in those areas, again, your mortgage company would require you have a flood policy.
Right.
If your house is at an elevation where all the groundwater is below you, it's not as necessary. If the topography of your neighborhood, fancy words, where all the water slides away from your house, you may not need it, right? But you can still buy it, and it's at a much lower cost because the risk is lower. That's how insurance works. And now you're covered on the off chance that it did. In 2010 here in Nashville, we had houses that would have never flooded in 1,000 years.
Yeah.
Flooded in that. We had the house we lived in, there was a tiny creek. And when I say tiny, I could probably reach it from me to you. Like, it was not a big body of water that flooded and ruined a bunch of houses that were right next to it, just because of the magnitude of where it was and the geography. So, and you mentioned another one, earthquake, sinkhole. These things are covered in some policies and not in others. And it comes down to what you, like, those are big events. If there was an earthquake, we're not that far away from a major fault line here.
Yeah.
A lot of people don't know that. And the chances of having an earthquake, there hasn't been one in our lifetime. Doesn't mean there won't be, right? So this comes down to, like, I'm never going to make a decision for a customer, but I want them to know all the things that could happen. I have customers that have earthquake, flood. Our policy does cover sinkhole, so that's included, but they have all these coverages that they may never use, but it gives them peace of mind and helps them sleep at night. That's more important to them than, you know, the $1,000 they're paying with these other policies in a year, just to make them feel better. They're willing to take that chance. There's other people that say, you know what, if there's an earthquake that happens, we're going to have a lot bigger problems in my house. So, you know, I just want people to make educated decisions. But yeah, those are some of the big things. Another thing that a lot of people don't think about is like pests. You know, this is Tennessee. I've had a possum and a raccoon and a armadillo, all these things, all these critters that live around my house.
Yeah.
We back up to woods, so there's a lot of stuff. Let's say one of those chews through your house, your foundation, your roof, whatever, right? They're not going to chew through your foundation, but they get into it, you know, through a hole or whatever that's happened. These, some of these things aren't covered. Depends on what type of animal it is. Termites, some of that's not covered, right? And every policy is different, but it's important to know what is covered and what isn't. And having somebody to sit down and talk through that with you is super important. So you can make a decision on what you need.
And I would also just add one more. I don't know if it's a misconception or something that maybe just people wouldn't know otherwise. Because most people may not ever experience this because there's a lot of incentives to bundle insurance. But at one point, I was buying an umbrella policy. I was shopping umbrella policies, looking around at different places, and the umbrella policy, obviously, because it wasn't going to be bundled, did not, like the people offering that didn't communicate or didn't see what I had in my home and my auto coverage amounts. If you have a home or some sort like renter's insurance, homeowner's insurance, if you have an auto policy, we were alluding to like a $25,000 liability limit in Tennessee. My insurance or my umbrella policy required me to, I think, have 100 or 200 or something like that. So let's say I'm trying to be responsible. I'm listening to the podcast. I heard a conversation about umbrella policies. I called somebody randomly and I got an insurance policy. If inside of the fine print of that umbrella policy, it requires me to have $100,000 of liability, my auto insurance only has $25,000 of liability. There's a $75,000 gap. It does not mean my umbrella policy won't pay. It just means I have to fill the gap first. So
it could mean, though.
I guess it could be.
Because if
shopping,
you signed an application that said, yes, I meet the minimum coverage, they could say you defaulted on your contract because you lied on your application, even though it was a lie by omission or a lie by not reading the fine print.
My personal policy, the way that it was explained is my auto policy would cover the $25K. I would then be like, let's say there's $200,000 of liability damage. I would be required, like my insurance would pay $25,000, so I'm on the hook, but I have an umbrella, but it doesn't kick in until that $100K. So before it would ever turn on, I would basically have to send $75,000 to the umbrella policy company, and then in turn, they would pick up the rest that they owe. And so, and again, that's just something like if you're just doing what you think you need to do and you're not having these conversations to make sure all these thresholds line up, the ecosystem, like I give this visual a lot of times about like people building these financial silos on their like financial farm. And oftentimes they're doing such good work at building all these silos, but they're just not connecting the silos. Right. And that's hard. That's the hard part. Yeah. Starting the appropriate savings account, the appropriate retirement account, funding education, having the right insurances, planning for retirement, planning for death or end of life or medical disasters, and planning for aging parents or aging children, or planning like all the things. We can build these individual silos that don't really communicate very well because we don't know the nuances. We don't understand all the things that really are required to make sure our silos are connected to build the ecosystem. Right. And that's where
a great point.
These personal conversations really come in. So if you're trying to build and reinforce and establish your financial farm and make it an ecosystem that works, well together, it's important to sit down with people that are in this space. And you can do all the work yourself. I say that all the time. We're giving you the education to kind of empower you. But my hope is that you're gaining the education that you can ask tough, challenging, and very thought-provoking questions to professionals for two reasons. One, you're going to get the right answers. You're going to get the ecosystem that actually works well together. But on the flip side, you can also, like, if they're not good at their job, you're going to be able to tell them because you're asking good questions and they don't have good answers. You'll just know, hey, this isn't the person for me. I need to go to the next.
Yeah, and then what's going to happen when you have a claim, right? If you do need them. I think that's one of the important things is the care and attention somebody's going to put in on the front end. Very similar to what you're going to get if you actually need them. Something just happened to your camera.
Oh, we're still going. I think. Let me hold on.
Okay. And while you're messing with that, I can keep talking because I don't. I would say
I'll
that
do a little cut. So that was around 34.
Okay.
35. Okay. So,
it is also important. I love the point you made about the umbrella policy. I would also say it's important to know that I said it earlier. Insurance is a contract between you and the insurance company, right? Mm-hmm. And the application is you're entering into the contract and not falsifying.
Sure.
Right? So this is education. When you asked me to do that, I was super excited because I love educating people. Right. And it is. I want you to go out and ask questions. I don't care if you're your insurance agent or not. Ask your own insurance agent the question. But if you're buying it online, you may omit a question or you may not answer it truthfully. Don't do that because if you do have an accident, you could be forfeiting your entire policy. So, their insurance companies will find out. There are a lot of public records. Well, there's public records. It's not, they have really, it's not like they're private eyes.
Really
there's
a lot of people do this too
tell on you.
with life insurance. I meet people that are, tobacco users and they'll be like, well, no, I don't use tobacco. Well, okay.
Yeah.
But if you do,
we will find out.
Somebody it can be found out, and you've paid all these premiums. If you're lucky, you'll get your premiums returned to you, but they're not going to pay you anything else.
Yeah. Okay.
All right. So let's wrap up by saying, okay, I got insurance, years ago.
Right.
I was getting into a new job or life transition, or I was young, but things are changing. I'm building net worth now. I need to come in and I need to review my insurance. Mm-hmm. Let's back into, what are some planning considerations to know I need to review my insurance? Or if I want to start reviewing my insurance every year, what are some triggers to change things
it's a great question.
From your perspective?
It's a great question.
And what's your review process look like?
Yeah, I would highly recommend you review your insurance regularly. And regularly can be a relative term to how much change you have in your life. So the biggest thing about an insurance review is something has changed, but the insurance company has no way of knowing. Any insurance carrier will not know if you have a child or a marriage or a significant change unless you tell them.
Yeah.
And there are certain parameters of that are super important to your coverage. A lot of times, the more people or the more cars you have on a policy, you might get a discount for that, right? So that's something that you would want to know. I've had a lot of married couples come to me and say, hey, we just got married. Can you quote my husband or my wife on my policy or whatever? And so we do it. And they save a ton of money by just having them both on the same policy. Sure. So things like that where it actually can help you, but also things that you may not be covered. If your spouse is driving your car, even though you're married, but if they're not on your policy, they're a relative in your house, that could impact your ability to have coverage.
Yeah,
and deny that claim.
And it's very easy to think about your kids or having a new kid or your spouse or getting married.
Right.
But we're seeing a ton of greatest generation and the aging older set of boomers move back in with their parents or kids through COVID. We're like, hey, I get to work remote now. I'm going to save some money. I'm going to move back home with mom and dad. All things that if not, it's just tons to consider, because if I'd move all my stuff home into my mom's house, am I living there? Am I on her policy, or do I need my own renter's policy to cover my stuff in her house? All things to consider.
And ask the question, right? Call the person who insures you. Ask the question.
Yeah.
I am living. So, we talked about misconceptions. Let's say you move back in with your mom and you're driving your mom's car. You have insurance on your truck, but she has insurance on her car and you're driving her car.
Yeah.
Whose insurance policy covers you to drive her car?
Good question.
Hers. So you lend your car to somebody. In most cases, the car is what's insured. The insurance follows the car.
Yeah.
So if under permissive use, you say, yeah, you can use my car. I give you permission to use it. And there's an accident, it's your policy that's impacted in most cases, right? And so call the company and ask, at what point does that become an exclusion because that person now lives in my house? These are really important details that you don't know a lot of times until something happens. So yes, if you have a significant life change, that's an obvious time. But the other thing we're seeing right now a lot of, so yeah, the greatest generation and changes because of just the way the world has been. The, what did you call it earlier? That we need some more
precedent.
Yeah, the unprecedented times that we're in have led to a lot of different things happening. But the other thing that's happening in our economy right now is inflation.
Yeah.
You've talked about it on your podcasts. I've listened. Inflation's a huge part of insurance, right? So my house is worth a stupid amount. I don't actually believe it, but it's just the way the market's been in the area we live in, right? And if something were to happen to my house, it may be underinsured. What does that mean? The cost to rebuild my house is increasing exponentially because the building materials are more expensive, labor is more expensive, and there's shortages of both. So that increases inflation, right? We don't need to do an economics lesson, but supply and demand is driving some of this, maybe a lot of it. We won't even get into what the other things might be, but if you just look at the supply and demand of things like cars, used cars, car parts, housing materials, lumber, whatever, all of those things increasing. If you haven't reviewed your insurance policy in 5 years when you bought your house, and now all of a sudden, I guarantee you, the company that I mainly work with has gone through this year and re-estimated what it would cost to build everybody's houses so that people weren't underinsured.
Yeah.
And that causes a need to review, right? So if you haven't reviewed your insurance policies in the last couple of years, do it.
And then the other side of that coin too is cash flows. Like a lot of times we're making decisions based on cash flows. Cash flows change.
They do.
We might be able to afford the policy we need, but also, we talk about like the order of operations for financial planning. One of the first things in that order of operations to check off the list is building that emergency savings. So if I was doing the right thing for me and I chose to have an extremely low deductible, so that way I could, not like if I could fork over $250 versus $2,000 in case of an accident, but now all of a sudden I have a bigger emergency savings, potentially during that review I might say, hey, I want my deductible to be higher because I have the savings. And that's kind of that self-insurance play where we are limiting our loss. Now, it doesn't matter if it's, $100,000 or $150,000, barring I have the right coverage.
Right.
But I know my risk of loss is capped at $2,000, right? And I have that $2,000 in my emergency savings. Whereas when I got started and the first time I sat down with you, I didn't have an emergency savings. So I needed that deductible to be $250.
Right.
So even
it's a great way to look at
it. Two plays for cash flow and emergency savings right there, that even if your cash flow has changed, you might be able to get the insurance that you didn't otherwise have the money to get last year or the year before or whenever. But also it could be something to say, hey, my emergency savings is more robust now. I can afford a higher deductible. So my premium will be lower, which will give me more money to put towards savings, or maybe just a nicer steak dinner once in a while, right?
Yep.
So those annual reviews are wildly important.
They are. And things change too with the insurance companies, right? So you asked me, like, what's my review process? So I will sit down and look at, first and foremost, has anything changed? It's a simple question. Right. Has anything changed that we don't know about? Tell us what's changed. Then I will look at their policies and kind of go through some key things. Are you missing any discounts? By the way, you're 57. The last time we talked, you were 52, whatever. That wouldn't go that long, but you were 54. There's a discount for being 55 and retired. Have you retired? Let's see what has changed in your life that might save you money even, or there's a discount that the company's added that you didn't have before. So let's see if we can qualify you for that. And then has anything, changed in the value of your assets? To your point, are you more comfortable taking on more risk?
Yeah.
The most common question in a review is, how can I lower my premium? And the most common answer is, are you willing to take on more risk? And if that's
and
a
it's
good trade-off
always-
you're willing to absorb,
It's
let's do it.
always a trade-off,
Yeah.
and you got to understand all that. And that understanding all of this, all the planning, all the knowledge that we get that makes us more confident to make these make these decisions come via conversations. And if we have them regularly, we're going to get better at them.
Absolutely.
All right. Any final thoughts?
No, I appreciate the time. I'm grateful for you. You're a good friend, but also I really appreciate what you do for your customers with the podcast, the education. It speaks to my heart, but also just as a human in the community. You're a good guy, and I'm grateful to know you. And I'm grateful for the chance to just share some of this knowledge that bounces around up here.
Yeah. Well, we
'cause I love
appreciate
it.
that. We love giving away education, guys. We are going to wrap up. If you guys want access to some of this stuff, or something's hit you or struck you and you got a deeper question, throw it at us. Go to harpethwealthpartners.com. You can send us a message, ask the questions. If you have other thoughts or other show ideas that you want explored, you're probably not the only one. We love doing any content, but we especially love doing the content that you want and you requested. So send us anything. And Christina, thanks for your time.
Thank you.
And we'll see you guys very soon.
Thanks.
We hope you learned from our conversation today. It is important to us that you know this is for educational purposes and not intended to be considered specific advice for any individual listener. If something we discussed is relevant to you and you have questions of how it might be applicable to your specific situation, please reach out to your financial professional. Of course, we are happy to have further conversations with you regarding specific questions or applications to your individual financial situation. With that, here are a few disclosures. Securities offered through LPL Financial, member FINRA, SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Harpeth Wealth Partners are separate entities from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Hypothetical examples presented are not representative of any specific investments. Your results may vary. With that, thank you, and we look forward to having you back. Take care.